Today, I want to talk about and show some proof of a float being sold multiple times over in the XELA stock. I also want to talk about how we know this is happening for AMC as well, but why the shorts are trying to desperately drag this play on for so long. So stay tuned and let's make some money. And now I'll dive straight in with the key information. So, Hang Loose tweeted saying starting today at 4 AM, XELA began its first trading day with 6.4 million shares outstanding. But 5 hours later, 8.2 million shares became available to borrow. He said that's 128% of the float becoming available to borrow in one singular instance. One singular hedge fund could have shorted more than the entire float in one singular trade this morning. He said this is fraud happening in broad daylight and no regulators have a problem with it. So I want to give a bit of a background about XELA and also explain how we know there's only 6.4 million shares outstanding. Now, XELA doesn't really look like a very strong company, so I wouldn't suggest that you do invest into it. But whether a company is strong or weak, fraud should not be acceptable. Part of the reason the XELA stock has fallen so significantly over the last few months is due to this recent unqualified audit opinion. So the auditor said to the stockholders and board of directors, "We've audited XELA Technologies and its subsidiaries and their internal control over financial reporting as of December 31st, 2022. In our opinion, because of the effect of the material weakness described below on the achievement of objectives of the control criteria, the company has not maintained effective internal control over financial reporting." Now, an unqualified audit opinion is still technically a clean audit report, but obviously they found some issues with control over their financial reporting process, which could potentially lead to issues in the future. Now, to try and stem this rapidly falling stock price, XELA Technologies tried to implement a 200-for-1 reverse stock split. Now, after that reverse split, there will be around 6.4 million shares of common stock issued and outstanding. Again, we've also got a document from XELA Technologies themselves that says immediately after the effects of the reverse split, the number of issued and outstanding shares of common stock will be approximately 6.4 million shares. But as you can see from this screenshot from Hang Loose, during the trading hours at 9:15, there was 8.2 million shares available to borrow. This isn't the number of shares available in the pre-market hours before trading properly opened. This is the number of shares available during actual market hours. And you can also see that this reverse stock split was approved on Friday and was implemented over the weekend. Therefore, in one singular instance, there's more shares available to borrow and available to short to try and push down the stock price of this company even further. As Washingtonian Province tweeted, he said market makers have been abusing this Madoff exemption to be a liquidity fairy in order to satisfy the artificial demands created by short sellers. He said originally the Madoff exemption was designed to alleviate the lack of liquidity from actual long demand. These market makers have obviously been using their bona fide market making exemption not to create additional shares for people to buy, but actually to create additional shares for people to sell short, aka creating synthetic shares for these short sellers to abuse. Now, obviously we know this is also happening for AMC as well, but obviously Adam Aaron hasn't yet publicly spoken about it. But that's because, as Citadel tweeted, he said Adam Aaron doesn't have enough evidence of synthetic shares that would stand up in a court of law, because there's other reasons for failed delivers. But this is why, as I spoke about in my video the other day, I think Bed Bath & Beyond was the sacrifice to cause the AMC squeeze. Because now we know what kind of information we need to obtain and show to this court of law to prove that synthetic shares do exist for AMC in that court of law. Obviously, we need to obtain this full shareholder list that includes Seed & Co. to prove once and for all how many shares of AMC are actually out there, synthetics and all. As we saw with Bed Bath & Beyond, that proved that the float was sold at least twice over. Obviously, I'm sure the document for AMC would prove the float sold at least twice over, if not 3, 4, 5, or even 10 times over. And when that document is obtained and provided to the court of law, Adam Aaron will then be free to speak on synthetic shorts as much as he likes, as it will be factually proven in court. Obviously, the shills have been saying how Adam Aaron hasn't commented on these synthetic shorts because they're trying to get Adam Aaron in trouble. But even though Adam Aaron doesn't talk about synthetic shorting, we know that it happens, and we know that hedge funds even get punished for it. As Crystal Ball tweeted, he said in 2014, US regulators, the SEC, slapped Wedbush Securities on the wrist for illegal short selling, money laundering, and record keeping violations. It says on June 6th, the US securities regulators, aka the SEC, on Friday filed a laundry list of civil charges against the brokerage firm Wedbush Securities, including charging it for violating market access rules that require firms to have risk controls in place. The SEC said that Wedbush also ran afoul of other rules on things including short selling, anti-money laundering requirements, and rules requiring them to preserve records. And I'm sure that, as usual, Wedbush probably accepted this fine without admitting or denying those charges. aka they knew they'd been caught for manipulative short selling, but instead of admitting to it, they just took the fine. But as Crystal tweeted, he said the reason why they extend runs on stocks like AMC is to create boredom, doubt, and narratives. Obviously, these shills have tried to push down AMC and tried to stop it from squeezing for as long as they possibly could. But why? Because the shorts know that right now they are stuck, but every single person they can convince to sell their AMC shares gets them closer and closer to closing out of their short position on the cheap, and it also means they have to pay less money during the squeeze. For each share that a retail investor paper hands and sells, that's a share these short sellers can buy back now and don't have to buy back later at inflated prices. That's why they've tried to hold down AMC for over 2 years to try and convince as many retail investors as possible to sell their shares. Yes, we have seen a decline in investors holding AMC, but it's only been a small decline from 4 million shareholders down to 3.8 million. Therefore, while they have managed to convince 200,000 people to sell their shares, the majority of apes are still holding those shares, and therefore these shorts still have to buy back every single one of them. Now, you may have also seen that Virtue tweeted saying there's a growing consensus supporting phased and limited SEC reforms. Supposedly, they believe there's a broad opposition to Gary Gensler's proposals to increase transparency around short selling. As Dave Lauer tweeted, he said, "I'll give them this. It takes some guts to publicly post some blatantly false information that misrepresents how firms in the industry, including your own clients, feel about SEC rule proposals." It's crazy that Virtue can be so deluded to believe that many people are against Gary Gensler and more regulation around short selling. I think pretty much every single person in the world is for greater regulation and wants to get rid of this synthetic short selling and short selling abuse. Now, the Ape of Spades has also tweeted out a warning saying, FYI apes, TD Ameritrade brokerage is messing with accounts that have AMC and Ape again. He said they've again changed their margin maintenance requirements to try and justify taking your shares. He said they do not send an email notification, just a note when you log in. If you are holding AMC and Ape on margin, they could try and change their margin requirements overnight to force you to hold multiple times your AMC and Ape position in available cash, otherwise justifiably selling your shares. If they change that margin requirement from 100% to 200, 300 or 400%, they can technically sell your shares in line with their agreements. And that's why, if you haven't already, getting out of a margin account is a must. Now, finally, I also wanted to say that even though this blatant fraud is ongoing, these hedge funds will still soon collapse. As Sven tweeted, he said at least 7 large companies filed for Chapter 11 bankruptcy protection in the last 48 hours. That's the largest number of filings on record during a 2-day period since at least 2008. Not only is the economy getting steadily worse, not only is the interest rate environment getting worse, not only is the stock market becoming a worse place to trade in, but also companies are really feeling this heat too. And if companies are feeling the heat, it won't be long until that impacts the consumer, and it won't be long until that then impacts these banks and these hedge funds. Now, this article says, interestingly, that the credit crunch is fueling this 48-hour bankruptcy rush with 7 filings. Now, a credit crunch obviously means that banks are stopping or at least slowing down their lending to companies. And if they're slowing down their lending to companies and to individuals, it won't be long until they start slowing down their lending and recalling back their lending from hedge funds as well. We know there is already an ongoing banking crisis, and many of these banks are struggling, and hedge funds will be the next victim. It won't be long until we start seeing headlines of more hedge funds collapsing and a bunch of hedge funds all going bankrupt all at the exact same time. Now I wonder what kind of black swan event could cause a mass ton of hedge funds to go bankrupt at the exact same time. Obviously, when the stock market crashes, it will be paired with the AMC GameStop and meme stock squeeze, causing tons of bankruptcies in tons of hedge funds. So guys, be sure to let me know what you think down in the comments below. And as always guys, be sure to ding that notification bell, because that way you'll be alerted when I upload a new video. Cheers.